Here are 3 of the best Vanguard index funds for long-term investing. Now, Vanguard index funds are like the Rolexes in the investing world, and these, in my opinion, are 3 of the best index funds that Vanguard has to offer. VOO Vanguard S&P 500 ETF, VTI Vanguard Total Stock Market Index Fund ETF, and finally VT Vanguard Total World Stock Index Fund ETF. Now in this video, I'm going to be settling the debate on what's the most commonly asked question of the best Vanguard index fund out of these 3 for long-term investing, and only one can come out on top. I'm going to be scoring these 3 ETFs on a point system based on these various categories: performance over the past 5 and 10 years, including all-time returns, dividend yield, expense ratio, diversification, risk, and the best and worst year of returns, including a bonus category. So whichever ETF wins in their respective category will get a point added to its final score, and of course the ETF with the most points obviously wins this competition. As always, I'll even include some honorable mention index funds at the end of this competition that can either be a direct replacement for either VOO, VTI, or even VT. Now, before we get started, I know some of you guys are going to ask, well, Marcos, why didn't you use some Vanguard mutual funds, because they are technically index funds? And that's because these Vanguard ETFs cost you literally $1 to invest in the fund versus at least $3,000 plus with their mutual fund equivalents. So just thank me later, because it literally saved you guys a ton of money, not only in fees, because traditionally ETFs have lower fees than mutual funds, but of course Vanguard mutual funds have low fees, but ETFs are just a touch lower, and I got you guys some better tax efficiency, so you're welcome. And if you watched till the end of this video, I own 2 out of the 3 index fund ETFs that I'm going to be talking about in this video in my investing accounts, either in my 401k, Roth IRA, and even my taxable brokerage account. So stick around to see those. Now let's get started. To provide some background color, VOO tracks the performance of the S&P 500 index, which consists of 500 large cap US companies. VOO is regarded as one of the most popular S&P 500 ETFs that money can buy for its low fees and high returns. Next is VTI, and it tracks the performance of the CRSP US Total Stock Market Index, which is basically all the stocks in the United States comprised in one fund, instead of the 500 of the largest like in VOO. Instead, VTI will include the small cap and mid cap companies in addition to large cap stocks. Lastly, VT tracks the FTSE Global All Cap Index, which covers both well-established and still developing markets. So basically, VT invests in just about all the stocks in the entire world. Talk about some serious diversification. A quick snapshot of the performance of these 3 ETFs with dividends reinvested. So we're going to hit total return with software from Seeking Alpha Data. The link is in my description if you guys want to check out Seeking Alpha for yourself. And over the past 5 years, we have VOO taking the crown for some impressive returns of over 100%, followed by VTI in second place and VT in third place. So VOO gets the first point added to its score. Over the past 10 years, we see VOO once again continuing to be the king of the hill at over 230% gains, followed by VTI in second place and VT in third place. So VOO gets yet another point added to its score. In terms of all-time performance, VOO has only been in inception since 2010 and VT since 2008, while VTI has been around since 2001, so the data is going to be off for all 3 of these index fund ETFs, and it's going to be pretty unfair because, of course, the ETF with the longest track history will have the largest advantage in terms of having the best returns over a long enough period of time. So I'm going to be opening up a backtester investing app to track the performance of these 3 ETFs since 2008, with dividends reinvested, and VOO comes out on top in first place with over 13.48% annual returns and returning the most amount of money, followed by VTI in a close second place and VT in third place. So we're going to be adding a point to VOO for having the best returns since 2008. However, VTI has been a close second place over the past 5 years, 10 years, all time. So I'm not going to be knocking off VTI for having such amazing returns, and it's going to be very close to the S&P 500 because of its large fund overlap of over 86%. So these funds have similar movements and up and down scenarios, so I will be awarding VTI half a point in all 3 of these categories, so VTI will come up with 1.5 points total added to its score. Moving on to a snapshot of these 3 ETFs, current dividend yields, we have VOO with just barely the lowest dividend yields, currently at 1.33%, followed by VTI in second place of 1.36%, and the winner of the dividend yield category, yielding the most passive income for you investors, is VT with the highest dividend yield of over 2.06%. Now, the reason why VT is able to give such a great dividend yield of over 2% is because VT holds international stocks. Now, international stocks are going to be just a little bit more generous than US paying stocks in terms of dividend payments. So VT gets its first official point on the board added to its score. In terms of expense ratio, we want to minimize our fees, and traditionally Vanguard funds have the lowest fees in the investing universe. VT has the highest expense ratio out of these three funds of 0.07%, but 0.07% is going to be still very, very low. Just because I might say it's the highest expense ratio doesn't mean that it's going to be super high and bad. Now, how I determine what's going to be a high expense ratio for a fund is by taking a look at Seeking Alpha data, going to the expenses tab, and you can see that the median fund is going to be 0.49% for VT. So 0.07% is going to be very, very low for comparable ETFs in that category of 0.49%. So as long as you're below that, in this case, you're way below that, you are good. And VTI and VOO both come in a tie in first place of a low expense ratio of 0.03%. So I'm going to be splitting the points of half a point to VOO and the other half of a point to VTI added to their score. Regarding diversification, we want many different sectors and companies of stocks in many different industries to have the best chance at making money as reliably and as safely as possible. For VTI, we have a high amount of diversification with over 3,733 holdings in many different sectors, pretty evenly distributed among each other, with technology, financials, and healthcare as the top three holdings. So I'm going to be giving VTI a point added to its score. VOO has over 500 companies, so it's going to be really diversified, and you get exposure to many different sectors, and we see technology as a top holding, followed by healthcare and financials. So I'm going to be giving VOO another point added to its tally. And finally, VT has over 9,870 holdings, and that's a ton of diversification, with the sector holdings being pretty evenly distributed like both VOO and VTI, as you can even get emerging markets, European stocks, and stocks in the Pacific world, in addition to North American companies. So VT gets another point added to its score, and all three of these ETFs and index funds are going to be amazing set it and forget it and great passively managed investments by Vanguard. This is getting super interesting as we have VOO in first place, followed by VTI in second place with just 3 points, and in third place is VT with 2 points. With risk, I'm going to be breaking it down into two different subcategories like standard deviation and a Seeking Alpha scorecard. In simple terms, if the standard deviation goes up, it means more fluctuations and higher uncertainty in a stock's returns, and a lower standard deviation, so if it goes down, it means more consistency and stability in its returns. So the ETF with a standard deviation that's a higher number is going to be more volatile than the ETF with a lower standard deviation that's a lower number percentage, meaning that the ETF is going to have either extreme wins and or extreme losses in any given year. Currently, VOO wins for having the lowest standard deviation and VTI with the highest standard deviation, which means that VTI has the highest volatility out of all three of these index fund ETFs. Now, this is because the VTI has small cap stocks in addition to large cap stocks, and traditionally small cap stocks have more volatility because they have the potential for higher returns than large cap growth stocks. So VOO gets a point on the board added to its tally. Taking a look at Seeking Alpha scorecards for risk, with VTI, it receives an A+ score, which is the most perfect score you can get by Seeking Alpha because of its low exposure to its top 10 holdings, which is basically an indicator of how consistently close or wide an ETF's performance is tracked relative to its benchmark. VT also received a perfect A+ risk score from Seeking Alpha for its lower standard deviation, low annualized volatility, and low concentration to its top 10 holdings and low tracking error. And VOO gets obviously an A+ grade as well for its low standard deviation, low annualized volatility, and low exposure to its top 10 holdings and low tracking error. So all three of these ETFs are amazing for having low risk, considered by Seeking Alpha, so they will all get 1 point added to their score. Lastly, we have a backtester of modeling all 3 of these ETFs' performance separately since 2008, with the dividends reinvested with a $100,000 portfolio to determine the best and worst years of performance for all 3 of these index funds. And we can see that the best year is awarded to VTI with a 33.45% return in its best year, because like I said earlier, small cap stocks which are included in VTI and sometimes maybe even mid cap stocks have the potential to grow and outperform large cap companies because of their growth nature. So we are going to give VTI a point added to its score. And the ETF that performed the best in its worst year of performance with the lowest decline is VT at a 18.01% loss, which is slightly better than the rest of the group because we have the world exposure, which is amazing because if the US economy dumps and falls by a lot of points, then we have other international stocks and countries to take over if the US economy collapses. So VT gets another point added to its final score. And for double the points, I'll be looking at returns once again because the goal of any investor is returns to have a massive retirement amount to live off of our investments. And we can see that VOO gave the highest returns with $100,000 invested since 2008 of a final balance of well over $500,000 and the highest compounded annual returns, followed by VTI in second place and VT in third place, so VOO gets 2 points added to its final score. Now for our bonus category, it's going to be one fund, set it and forget it, and buy and hold forever, and that could be an ETF that could serve as your only investment for the rest of your life. Now both VOO and VTI are amazing investments. My heart says it's going to be VOO and VTI, but VT has the total world. It's going to have other countries, including the United States. Now that, in my opinion, is going to be true diversification in any good investor's book, because with VOO and VTI, you have a high concentration in only US stocks, but that's okay in my opinion because it's going to have many different stocks from many different sectors from many different industries. So I'm going to be awarding a 1 point to all 3 of these ETFs, but another quarter point to VT because of its bonus category in international companies and stocks. Now drumroll please of the winner of the best Vanguard index fund, at least in this competition. Now the winner in first place at 9.5 points is VOO. Coming in second place is VTI at 6 points. And in third place, putting up a great fight, is VT coming in at 5.25 points. Congrats to VOO on being the best Vanguard index fund for this competition that money can buy in the investing world. Now, just because VOO had the best returns over the past 50 years, it doesn't mean that's going to have the best returns in the next 50 years. I don't have a crystal ball. I can't predict that the US stock market is going to continue to be the behemoth that it is in terms of having the best performance and the best companies in the world. Now, as for me as an investor in the USA, I truly believe that the United States is going to continue to crush it in the stock market. Now, that's why I am an S&P 500 investor, as my highest holding in both my Roth IRA and my taxable brokerage account with Vanguard of nearly $70,000. So I do love VOO as my best index fund for those accounts. Now, I also have VTI in my 401k with my employer of just under $10,000. Now, why I have both, you might say, is because, well, with my employer, they only have a total stock market ETF like Vanguard's VTI and not the S&P 500, but that's okay because I am quote unquote diversifying more by having different funds and different investing accounts. Here are the honorable mention funds and ETFs and mutual funds that can replace either VOO, VTI, or VT. For the sake of time, you could just pause the video to see all these ETFs and mutual funds for yourself. Now that about wraps it up for this video, guys, on the best Vanguard index funds that money can buy, like VOO, VTI, and VT. Now, if you guys like this video, please give a like because this cute puppy did, and comment down below your favorite Vanguard index fund or Vanguard index fund equivalent that I mentioned on the honorable mention list. Now, hopefully you guys have a great rest of your day and continue to crush in the stock market. I love you guys so much. Take it easy. Peace.